Hello, everyone. I'm excited to embark this journey with you guys. And my name is Rebecca, and I work at the Wealth Building CPA with Ebere. And I would also like to introduce Ebere, our CPA, and she's excited today as well. So please introduce yourself, Ebere.
Hi everyone, this is Ebere Okoye. So right now I am going to share our screen so that you can participate in the presentation that we're about to go through. So let's see here. Okay. Okay, wonderful.
So once again, thank you guys for joining us. And today we will go ahead and touch base on the wealth building secrets, a journey to wealth. But more specifically, we will touch base on the Trump tax analysis. And we will begin shortly. So our special guest is, of course, Ebere Okoye. She is a CPA and an active real estate investor and founder of the Wealth Building CPA. She owns real estate investments in 5 states across the Eastern Coast. Her company has helped over 5,000 people like you prepare their taxes online and offline. Her greatest joy comes from helping clients, friends, and associates become free of financial stress. Hey, Bear. So can you give us some tips and advantages of the WBCPA?
Absolutely. WBCPA stands for the Wealth Building CPA. Being in the industry for so many years, I'm very familiar with money saving strategies, which I love to implement all of the time, combined with my 23 years of experience as a CPA and tax strategist, as well as 18 years of experience as a real estate investor and business owner. With this combination, it's always a great pleasure for me to empower investors, small business owners, those that are looking to build wealth, and empower them to make their financial life so much more profitable. What this means is that people can trust us as one of their team members so that they can spend more time on money in their business.
And of course, we see your family and they're so beautiful. And I've worked with a couple of them myself, and they're amazing to work with. And they do have the ability to build wealth just like you, Bear.
Thank you.
So today we will definitely touch base on the Trump tax analysis, like I said before. And these are the 10 items that we'll touch base on. The first item is tax savings deadline. Second item, hire a good tax accountant. Third item is various types of income. Fourth is the net operating losses. The next one is the rental losses. The sixth item would be business deductions. The seventh one would be non-taxable income. The eighth one would be information pandemic. The ninth one would be AMT. And the last one, tax dues. All right, let's get started.
Absolutely. So the wealth building, before I get into the Trump tax analysis, just wanted to talk about our wealth building program. It's a 12-month training program that takes you step by step through the steps required to run a successful and efficient real estate business. On my team, we've developed this system after years of working with business owners and real estate investors on how to best use their professional skills, passion, and experience to pursue their entrepreneurial dream. This information is also available on our website. So let us get started. About a couple of days ago, the New York Times report that President Donald Trump paid just $750 in federal income tax the year he entered the White House. And thanks to the colossal losses, no income tax at all in 11 of the 18 years that the Times reviewed. This is raising doubts about President Trump's self-image as a shrewd and successful businessman. My goal here is not to really critique the president or his tax returns. My goal is to provide some behind-the-scenes perspectives that can help explain what you can do as a taxpayer to take advantage of all the loopholes that are available to you. So the first thing is just understanding about tax planning. Most people know about April 15th. April 15th is your tax filing deadline, but that only has to do with compliance. That's the date that the IRS has given you to submit your taxes. However, December 31st is your tax savings deadline, and it has to do with proactive tax planning to reduce your tax liability before the year runs out. So if you want to see a significant decrease in your tax liability, you should start thinking more December 31st, because you want to do tax planning before the year runs out. The next item that we're going to look at is hiring a good accountant. As we always say, you either pay the IRS or you pay a good accountant who thoroughly understands your business and works for you, not the IRS. I know some people usually just pay for compliance. So sometimes you're not paying that much because you just need taxes prepared. But that's not really a good strategy if you want to save on taxes. And so sometimes look at the money that you pay accountants and a good CPA as an investment in getting a reduced tax liability. Of course, you can expect that the higher amount of money that you're paying should result in you having a reduced tax liability with all the legal loopholes. The third thing is just understanding that there's 3 different kinds of income. So the kind of tax that you pay is based on the kind of income that you have. There's earned income, passive income, and portfolio income. Earned income consists of income that you earn while you're working a full-time job or running a business. Note that running a business does not include rental real estate business in most cases. Passive income is income earned from rents, royalties, and stakes in limited partnerships. Portfolio income is income from dividend interest and capital gains. So a lot of people would be wondering, why am I paying all these taxes? Well, what kind of income do you have? If you have mostly earned income, it means that you were inadvertently, you're going to pay more taxes than most people out there. For somebody that has passive income or portfolio income, their taxes are going to be much lower than yours. So the next item that we will look at is net operating losses. Just understand that when you have operating losses from prior years, it can be used to offset income in current years. This is mostly for business owners. This also applies to those who own rental property, the passive activity loss. So most of the time you would find out that losses that people have from prior years, they're able to use it in the current year. The next thing is rental losses. That's probably the only income that's allowed to be reduced with paper expenses, such as depreciation. So it's very possible to generate a lot of rental income, but have no taxable income due to depreciation or accelerated depreciation and cost segregation. The next thing that we'll look at is business deductions. There's a lot of deductions, such as mileage, a contribution to a 401k, health premiums that are available to business owners, but are not available to employees. So you may have a situation where 2 people are making the same amount of money. One has earned income and is an employee. Another one has earned income and is in a business. But because of all these deductions and things that are available to business owners, the taxable income for the business owner would inadvertently be lower than the taxable income from a wage earner. Non-taxable income. Another thing to keep in mind is that sometimes a lot of investors and business owners are able to tap into their non-taxable income. So people that own assets that generate portfolio income and passive income, you're able to access the equity in those assets through loans and lines of credit, and proceeds from a refinance and line of credits are not taxable. So you can have somebody that has $500,000 in equity, from stocks. That's capital gains. If they sold today, they'll get capital gains. And you're like, well, if they're not paying taxes, how are they surviving? Well, most banks would lend based off of their assets. So if the bank lends them money of the assets, they've effectively accessed the equity that they have in the properties or in the line of credit, or that they have on their stock account, but they don't have to pay taxes on it because proceeds from a refinance or money that you take out from a line of credit, it's not going to be taxable. Okay, next, and then we're looking for information pandemic. There's a whole lot of information and misinformation out there. When the New York Times says that Trump only paid $750 in taxes, they're not really providing an accurate picture, because line 56 of the tax return is not the final tax due line. Line 63, and prior to line 56, there are a lot of credits available. So it's possible that somebody could have a limited amount of tax on line 56, but that's not their starting tax liability. If they have tax credits, foreign tax credits and other kinds of credits, it would reduce their taxes. This is in no way saying that that President Trump's tax returns are accurate. I'm just giving reasons why line 56 may be a much lower number from the actual calculated tax liability. And then there's also the alternative minimum tax. It's possible to have regular income taxes, but still have what is called alternative minimum tax. This means that there are certain deductions that high income earners are not able to deduct, even if they're in the tax code. So sometimes you may have somebody not paying regular taxes, but they're still going to have alternative minimum tax. And then finally, just know that there's different kind of taxes due. There's the income tax, payroll tax, property tax, sales tax, inheritance tax, gift tax. Understanding the different kind of taxes available can be very, very valuable in financial planning. So that's it. I didn't want to spend too much time on this. Just wanted to bring people information that will be helpful to them.
Absolutely. Thank you so much, Ebere. So moving forward, as a new or seasoned real estate investor, are you getting the best tax advice? Let me evaluate your financial and tax situation, then develop a customized tax strategy just for you. Together, we will come up with a strategic plan designed to answer your questions as you build your own customized wealth building plan. I am not just your average CPA. I'm also an active investor. My reputation has been built through years of experience and innovation in creating tax strategies by offering tax compliances and planning for top real estate investors all over the United States. I know that the rich are doing to create and protect and persevere their assets. All of us have the responsibility to pay taxes, but none of us should pay more than our share. The tax laws are complex. Most of us do not have access to the kind of information that would allow us to use these loopholes that all taxpayers are entitled to. My personal goal is to educate individuals and corporations on how to keep more of what they make. All right. So don't forget, when you join the program, you will have an initial phone consultation to determine which of the strategy stages need to be implemented first. You do not have to follow the order prescribed above, but you come up with a personalized wealth building program. This program incorporates plenty of time for unlimited consultations with the CPA on any issues you have as you progress in your financial plan. So you will be able to ask as many specific questions as you like. And at the end of the year, of 1 year, you'll know exactly what you need to do to succeed in your small business. All right, Ebere Okoye, CPA and Associates is a tax and financial management company that can manage all your financial service needs, leaving you safe, secure, and with more time for your family and your real estate business. We offer you, here's the following: preparation of individual and business tax returns, personalized tax reduction strategies, newsletters of hot tax facts, business analysis meetings, asset protections, and tax planning, restructure and business financing consulting, complete outsourced business accounting and bookkeeping, complete outsourced retirement planning. And we also have
so what we're going to do is we're going to look at the wealth building plan. Well, the wealth building plan, we can provide more information on that, but it, pretty much is at $39.95, but we do have payment plans available. And then the wealth building plan B, which is a reduced plan, is at $29.95. All this information is available on our website. Rebecca, I guess you can go ahead and let them know how they can contact us.
Absolutely. So you can always contact us at 301-441-4538, and we will be very, very happy to assist you with all your needs.
Thank you, guys. Well, that's about it. We want to thank you so much for joining us. We just wanted to bring you this quick information, and we hope you guys have a great rest of the day. Thanks and have a great day. Bye.